Good afternoon, everybody. This afternoon we're dealing with the business tax elements of the budget. First of all, we'll start with the self-employed personal allowance and tax rates. The personal allowance for sole traders and partners rises to £12,570 from the 6th of April 2021 up to the 5th of April 2026. The higher rate threshold rises to £50,270 and then remains at this level up to and including the 5th of April 2026. The higher rate for savings and dividends income applies similarly. The income tax bands for self-employed, 20% from the personal allowance limit up to the higher rate of £50,270, then 40% from £50,271 up to £150,000, and then 45% on the additional earnings above £150,000. This means that, in effect, with the increase in the personal allowance, you earn an extra £70 without paying any income tax. NIC class 2 and 4 for the self-employed. If you're earning less than 6,515, it's 0%. If you're earning between that and £9,658 per annum, it is £3.05 per week. That's your class 2 contribution only. If you earn above, so from 9,568 up to the higher rate threshold of £50,270, it's 9% of that amount, of that band, plus the class 2 £3.05 per week. And if you're, for the portion that you earn above the higher threshold of £50,270 per year, it is 2% on the excess, plus the class 2 contribution of £3.05 per week. In respect of corporate tax, from the 1st of April 2023, there is a new main rate of 25%, but it's broken up as follows: 19% rate for profits up to 50,000, and then a tapering to the main rate of 25% for profits between 50,000 and 250,000, and then the main rate of 25% on the portion for profits over £250,000. There's also a diverted profits rate, which will rise 31% from the 1st of April 2023, where companies are diverting profits outside of the UK. There's also an extension of the trading carryback loss relief. Up till now, it has been for 1 year only, going back 12 months. So if you have a short accounting period, it's on a pro rata time apportioned basis, but you get it for the full, you can pass it back for the full 12 months. This has now been extended to 3 years. It's available for companies and also unincorporated businesses, for example, sole traders and partners. Unincorporated businesses and companies that are not members of a corporate group will be able to obtain up to £2 million of losses which they can carry back to each of 2020 to 21 and 2021 to 22. companies that are members of a corporate group have two options. They will be able to obtain relief for up to 200,000 of losses in each company that has the losses for each of 2020 to 21 and 21 to 22 without any group limitation. So there's no, the £2 million cap does not apply to that. So in reality, you could get more if you've got individual companies cumulatively with losses of 200,000 or less, amounting to more than that sum. Or companies that are members of a corporate group can have a total cumulative amount of 2 million of losses for each of those tax years, 2020 and 2021. But it's obviously it's not limited to 200,000 per individual company, but there is a £2 million cap across the group as a whole. Now, the detail to this will be coming out in the finance bill, and full details of the group cap will be announced in due course. There's a new capital allowance offer. So as a result of the measures announced at the budget, businesses will now benefit from 4 significant capital allowance measures. There's the super deduction, which offers 130% first year relief on qualifying main rate plant and machinery investments until the 31st of March 2023. It's only for companies, and obviously main rate plant and machinery are such things as tangible capital assets used in the course of a business. And I've given you some examples there: computer equipment and servers, tractors, lorries, vans, ladders, drills, cranes, electric vehicle charge points, refrigeration units, pressers, foundry equipment, anything that's used that's of a capital nature within the trade that's not specifically put into a different category. Now, so there's also a 50% first year allowance for special rate assets. So that's not our main rate assets, it's special rate assets, which include long life assets, which are over 25 years since of use since the date of its first purchase, and that's until the 31st of March 2023. And again, it's just for companies, and I've given you some examples here of what is defined as a special rate asset. It's parts of a building considered integral, known as integral features. And I've defined that here, given you some examples. That's such things, for example, you've got a hotel or you've got a factory that have lifts, escalators, and moving walkways, space and water heating systems, air conditioning and air cooling systems, hot and cold water systems, but not toilet and kitchen facilities, electrical systems, including lighting systems, and external solar shading. So that's our integral features, which is one category of our, so I'm going the wrong direction there, of our special rate assets. There's also so again, special rate assets would be any items with a long life, over 25 years, and thermal insulation of buildings, and cars with carbon dioxide emissions over a certain threshold. Another capital allowance offer is the annual investment allowance, which provides 100% relief for plant and machinery up to its highest ever £1 million threshold, which was going to be reduced to 200,000, but has now been extended until the 31st of December 2021. Now, obviously, you can decide that has a limit. The super deduction doesn't appear to have a limit, but obviously we'll have to wait for the legislation, but that's not applicable until the 31st of March 2023. So you would be using your annual investment allowance initially. And then we've got the introduction of our new Freeports tax sites, which are, have, amongst many other reliefs, which I will go into in a moment, they can access new enhanced capital allowances. And this is open to both companies, individuals, partnerships. They can all benefit from an increased level of structures and buildings allowance for investments until the 30th of September 2026. They get 10%. It's currently 3% and has been 2% in previous tax years. I'll go into that a little more detail. The annual investment allowance is open to incorporated and unincorporated businesses. Right, Freeports, they're designated areas, so they include East Midlands Airport, Felixstowe and Harwich, Humber, Liverpool City Region, Plymouth, Solent, Thames and Teesside. And they offer generous tax reliefs and simplified custom procedures. They have the enhanced 10% rate of structures and buildings allowance for constructing and renovating non-residential structures and buildings, so that the investment is fully relieved after 10 years for corporation and income tax. To qualify, the building must be brought into use on or before the 30th of September 2026. There's also enhanced capital allowance of 100% for companies investing in plant and machinery for use in the Freeport. And this applies to both the main and special rate assets. And that's available until the 30th of September 2026. Capital allowances are the alternative to a tax depreciation. So normally in your accounts, you'd have your depreciation, you add that back, thereby increasing your profits, and then deduct the allowable capital allowances, whether that be main rate, special rate, or your structures and buildings allowance. There's full relief from stamp duty land tax on land or property within the Freeport. It must be purchased and used for qualifying commercial purposes, and it's available until the 30th of September 2026. Full business rate relief is available for all new businesses and certain existing businesses where they expand until the 30th of September 2026. And once applied for, the relief applies for 5 years from first receipt. The government intends to make employer national insurance contributions relief available for eligible employees in Freeport sites from April 2022, and it's intended that it should be available until at least April 2026, with the intention to extend it to April 2031, subject to review. The VAT registration thresholds remain the same. So the obligation, you've got your 2 tests for turnover, either looking back 12 months, reaching 85,000, or looking forward 3 months, expected to reach that amount. And it's going to be maintained until 2023 to 24 tax year. The deregistration threshold remains the same at 83,000 up until the same date. There are UK-wide VAT reductions for tourism and hospitality, which I will come to in a moment. The extension to the VAT reductions for tourism and hospitality, it's cut to 5% for goods and services supplied by hospitality, accommodation and attractions across the UK until the 30th of September 2021. So it's the output tax. So it's the tax they charge, the VAT they charge their customers, that is cut to 5%, making their goods and services more attractive to the consumer. This will be followed by a 12.5% rate for a further 6 months until the 31st of March 2022. Now, there is a UK-wide VAT deferral scheme, and this is available for any business that took advantage of the original VAT deferral on VAT returns from the 20th of March through to the end of June 2020. They can now opt to use the VAT deferral new payment scheme to pay that deferred VAT in up to 11 equal payments from March 2021, rather than the one large payment, which was originally due by the 31st of March 2021. Right, you may be charged interest or a penalty if you do not either pay the deferred VAT in full by the 31st of March 2021, opt into the new payment scheme by the 21st of June 2021, or agree extra help to pay with HMRC by the 30th of June 2021. There's also powers to tackle electronic sales suppression, which is where businesses use software to hide the true turnover, their true sales figures. There's also small and medium-sized enterprises R&D, research and development tax credit. Now this has been capped, so the maximum in any 1 year is £20,000 plus 3 times the company's total PAYE and national insurance liability. Now, small and medium-sized enterprises, let me just explain the system, can claim a tax deduction of 230% for qualifying research and development costs. And the relief relates to qualifying expenditure on such things as staff costs. So that would be salary and employers' national insurance and pension contributions, but not any benefits in kind. Software and consumable items that are directly involved with the production of the research and development or attributable to it. Relevant payments to subjects of clinical trials, subcontracted R&D costs, externally provided workers, for example, agency workers, Relief is not available for consumables reflected in goods and services sold as part of the company's trade. So if you're making a profit, you can get, instead of 100% deduction for your expense, you get 230%. So it's the actual expenditure plus 130%. However, small and medium enterprises with losses have to go slightly a different way. They can surrender them to HMRC and receive a tax credit, which is a repayment. And this is what this is in relation to. It's that tax credit, that repayment. It's got nothing to do with the deduction from trading profits. The surrenderable amount was the lower of the qualifying research and development costs times 230%. Unrelieved trading losses, so you'd assume that you'd make your current year loss claim, and the tax credit was 14.5% of that. But now it's been capped, so it's the same calculation, but it would be capped in any 1 year to £20,000 plus 3 times the company's total PAYE and NIC liability. Large companies are dealt with under a different regime, RDEC, which this is not applicable to. Now they are, at the budget, they gave the summary of responses, they published the summary of responses to a consultation on research and development, on the scope of research and development tax credit claims. So they wanted to know what costs companies can include in that calculation. And in particular, they were looking at whether the costs of accessing data sets, which is the cost of data acquisition, and payments for cloud computing services, which as well as the costs of data cleansing and manipulation, should be included. And at the moment, they're not always. So at the moment, traditional software stored on the premises that's used within research and development has been included. And they're trying to recognise within this consultation that the industries have changed. We've now got artificial intelligence. You need reams of data in order for them to organically develop and process that information. Now, that has now, at the same time in the budget, they've now launched a wider consultation, which is looking at R&D generally, and the trends to now lease software and access via the cloud as opposed to traditional software stored on the premises. And they're looking at the different types of services. So you've got software as a service, where the user accesses third-party software. There's infrastructure as a service, where the user accesses instant computer infrastructure, e.g. Google Cloud Platform, Microsoft Azure. And there's the platform as a service, where the user manages a software application running on the platform. They believe now that it's this essential modern form of computational research and development, and therefore cloud computing costs should qualify by the same rationale as software costs. Now, the responses were from accountants, the industry and their advisors, and they were mooting that it should be extended to cover all of these, and it appears that the government seems to be in favour, although we haven't had a conclusion to the consultation as yet. Now, obviously at the moment, we've currently got physical servers and in-house digital infrastructure, which attracts relief via capital allowances, annual investment allowance, and R&D allowance. and software is qualifying expenditure for research and development as it stands at the moment. Cloud computing services don't have similar relief. They're also going to look at indirect activities. So at the moment, if you've got HR costs, you can attribute some of those costs to the research and development team, apportion it, and those ancillary activities have been accepted as part of the research and development costs, but the government is now looking to see whether that should remain the norm or whether it should be restricted. And they were seeking responses from the respondents to the consultation. So as I say, it's been launched in on the date of the budget, and we're looking to see obviously what comes from that. So they'll be looking at research and development credit for the larger companies, which is the REDEC, which is equal to 13% of qualifying expenditure. There's the research and development tax relief for the small and medium-sized enterprise, which I've discussed, which is in effect your cost plus 130% allowance, as opposed to your tax credit worth 14.5%. And again, whether it covers expenditure on staffing costs, etc. If we can now go on to apprenticeships, this has now been increased, the payment to employers, to £3,000 for employers who hire a new apprentice between the 1st of April 2021 and the 30th of September 2021, whereas it was previously £1,500 for an apprentice, or £2,000 if they were 24 years of age or under. This £3,000 is in addition to the existing £1,000 payment the government provides for all new 16 to 18-year-old apprentices and those under 25 with an education, health and care plan. They've also now introduced a new flexi-job apprenticeship programme, which enables apprentices to work with a number of employers in one particular sector to widen their opportunity and experience. Business rates relief. The government's continuing the 100% business rates relief for eligible businesses in retail, hospitality and leisure sectors in England from the 1st of April 2021 to the 30th of June 2021. This will be followed by 66% business rates relief from the 1st of July 2021 to the 31st of March 2022. The relief is capped at £2 million per business for properties that were required to be closed on the 5th of January 2021, or £105,000 per business for other eligible properties. Nurseries will qualify for relief under other eligible properties. Legislation is due to ensure where business rates repayments have been made. For example, in the news, there were various companies that paid the relief back to the government. Legislation is being passed so they can, it's a deductible expense for corporation tax and income tax, which obviously currently it wouldn't have been. Statutory sick pay. Small and medium-sized employers in the UK will continue to be able to reclaim up to 2 weeks of eligible statutory sick pay per employee from the government. This is a temporary measure. And then there's a number of schemes to assist businesses financially. There's the Recovery Loan Scheme, which is a new loan scheme to support access to finance for UK businesses. It ensures businesses can access up to £2 million in loans and other kinds of finance once the existing COVID-19 scheme closes, the government guarantees 80% of the finance to the lender. It launches on the 6th of April and is open until the 31st of December, subject to review. The finance is available on term loans and overdrafts between £25,000 and £10 million per business, up to 3 years, and also available on invoice and asset finance between £1,000 and £10 million per business, up to 6 years. You will be able to apply for the loan if your business is trading in the UK. Businesses who have already received support under the existing COVID-19 guaranteed loan scheme will still be eligible under this scheme as long as they meet all other eligibility criteria. And as I've said, the scheme launches on the 6th of April 2021. There is now also a fourth grant for self-employment income support, and it's set at 80% of 3 months trading profits, and it's paid in a single instalment capped at £7,500. This grant is now open to those who submitted a 2019 to 20 tax return. So is now open to those that became self-employed in this year. The rest of the eligibility criteria remains the same. Even for those who received the first 3 grants, the amount you are eligible for may change, since your eligibility is now based on your 2019 to 2020 tax year. Eligibility clauses: you must have traded in both 19 to 20 and 20 to 21, be currently trading but impacted by reduced demand, or have been trading but are temporarily unable to do so due to COVID-19. You must also declare that you intend to continue to trade and that you reasonably believe that there will be a significant reduction in trading profits. The online claims service for this grant will be available from late April 2021 until the 31st of May 2021. HMRC will contact those eligible by mid-April. There'll also be a 5th and final grant which covers May 2021 to September 2021. This can be claimed from late July. The 5th grant will be worth as follows: 80% of 3 months average trading profits, capped at 7,500 for those with a turnover reduction of 30% or more. 30% of 3 months average trading profits, capped at £2,850 for those with a turnover reduction of less than 30%. Rishi Sunak has introduced a new restart grant worth £5 billion to help small businesses who are worst affected to get restarted. 18,000 is available for businesses in hospitality, accommodation, leisure, personal care and gyms. Non-essential retail business can get up to £6,000 to help them reopen. The scheme will be administered by local councils, and this grant is replacing the local restriction support grant for both open and closed businesses, since this closes at the end of the month. Thank you for listening. Are there any questions? I shall stop sharing my screen so I can come back to the main one. Any questions, anybody?
No, not with me, thanks, Ingrid.
Okay, well, in that case, then I think we will close the Zoom call. Could you stop recording?